Right now, let's take a closer look at the state of the consumer as we enter the holiday shopping season. For that, we welcome Joe Lavorgna, who is the chief economist for the Americas, also a CNBC contributor. John Ryding, Brean Capital, chief economic advisors, and our guest host, Jason Trennert of Strategas Research Partners. Thank you all for being here. Joe, did I mention you're with Natixis, or did I skip
You did,
over that?
and you got it right.
Okay, all right.
You got it right.
Gentlemen, let's just talk about where Steve left us on this. What do you think, just in terms of the state of the consumer right now? How healthy do you think they are?
Very, and Steve left out one key factor, which is oil or gas. Gas prices are low. Households have a lot of disposable income. Next year, the surprise for me is growth could be better, unemployment lower. These consumer trends look very good in my mind. I wouldn't worry about retail sales. It's a very small piece, Becky. Services drive the consumer. Everything looks pretty good. I don't see why it can't continue.
Hey, John, let's just talk about this. We constantly ask people if the consumer can continue to hold up the economy. You say that's the wrong question, though. What should we be asking?
I think it is the wrong question because the consumer spends, or at least the majority of consumers, not maybe the high-end consumers are spending at Tiffany's, which is a big story today, obviously, but the 80, 90% of the consumers spend their income. And that depends on employment. And so I think wage growth and employment growth are the keys to consumer spending. And the signals there remain quite positive. Slight rolling over in job openings, little uptick in unemployment claims. I'd watch that. We don't have to worry about the health of the consumer as long as the employment situation is in place, because the savings rate's surprisingly high, especially given the wealth effect, the level of wealth in house prices and equity prices. So I'd watch the labor market, but for the holidays, we should be fine.
Joe, that was going to be my question. If we're worried about what happens to the consumer next year, looking at the underlying trends, both for employment and for wages, they look pretty strong, too.
Yeah, they do. And the variable that I watch very closely, the yield curve, did not get very negative, and it didn't stay negative for very long. It steepened out. Financials and cyclicals have been performing quite well. I don't see why the economy can't do very well next year. And this uncertainty, which is what you hear time and time again, I'm going to make a controversial statement and say that uncertainty is actually going to cause business to actually do some stuff and come off the sidelines. Because if you have a lot of different possible outcomes, you have to pick one of them. You just can't kind of sit on the sidelines and do nothing. And if the consumer does better next year because unemployment's falling, that's a good environment for CapEx.
Jace, that's actually a good thing.
Well, the potential, I would say, the tax cut that was passed is a very supply-side tax cut, and there is some concern, depending on who wins, if it's from the Democratic side, whether those tax cuts would stay in place. So there's a chance that it actually pulls capital spending forward. I go back, Joe, to something that you said with regard to Christmas sales. The two things that we found correlate most highly to holiday sales are prices of gasoline at the pump and the stock market. Year over year, nationally, prices at the pump are basically unchanged unless you're in California. In California, they're actually up meaningfully. As far as the stock market is concerned, you have to remember the S&P fell 9% between December 19th, the last Fed tightening, and Christmas Eve day. So that was not a particularly good welcome development, I would say, for Christmas sales. And this time around, obviously, the Fed is on the sidelines, so it should augur well for better.
I just want to press pause for 1 second because we have a little bit of news crossing the tape right now. eBay apparently close to selling StubHub for about $4 billion to Viagogo. eBay had talked about selling StubHub for quite some time, and now Dow Jones is reporting that they are.
It's close to a deal? The deal hasn't happened yet?
They say near a deal. Mm-hmm. So this is according to Dow Jones, not not our own reporting at all.
Could be announced Monday.
What'd you say?
Could be announced Monday.
Yes.
So.
Coming back to the employment story, I think one of the strange disconnects we have in the economy is we have this disconnect between capital spending, which has been soft, and employment growth, which, given the labor force, has been relatively strong. And I agree it was a supply-side tax cut, and we expected companies to respond by boosting capital spending. But the trade uncertainties hit, and the capital spending numbers have been very disappointing. So if we're going to get Joe's reacceleration in the economy next year, I think it has to come from the corporate side and capital spending, not from the consumer side.
I agree with that, and I think in some ways the trade tensions in some ways sterilize the benefits of the tax cut. Now, in an odd way for the president, you could say he's given himself some shadow rate cuts for 2020, and you could say, is this a Bill Belichick type, play where you essentially slow things down just enough in 2019 to let them run hot into the election year in 2020. It's interesting.
Although, Jason, here's the thing. CapEx has been weak. This is a point I've made time and time again. Up until last quarter, the weakest part of the economy was construction. The weakest part. That's all rates. This trade stuff, to me, again, is totally overplayed, has been overplayed the whole time. It's the excuse for everything. S&Ps are higher, the economy's still healthy, and housing now is returning to some level of positive trend because rates were so high late last year.
But the problem is residential investment's 3 or 4% of the economy. Capital spending's a much higher percentage.
Yeah, but there's a big multiplier, though, on construction, though, John. There's a big multiplier.
We need the productivity gains. So I still remain concerned that the capital spending story is the one that we need to fall into place. And if we get too far into next year, you're right, then there becomes uncertainty about what happens in the election. And companies, I disagree with John, companies do not like uncertainty and they hold back from deploying capital. A key thing you need in uncertain times is liquidity, and then you deploy when your animal spirits are higher. And uncertainty does not drive animal spirits.